Day 2 here at the Denver Gold Forum. Joining me now is my good friend Paul Burton of Thomson Reuters GFMS. Paul, thank you so much for being with me.
Pleasure, Danielle. Always a pleasure to see you.
How's the Denver Gold Forum for you so far?
I think it's been a very good forum. Very busy, of course. There's something like 160 companies here, so there's a lot of companies to catch up with and a lot of chief executives to talk to. And yeah.
Right. So I know you were moderating one session, but one thing I'd like to talk to you a little bit about today is an area you've been concentrating on, and that's mergers and acquisitions in the industry. Tell us a little bit about what you've been finding.
Yeah, sure. I think it's we haven't seen that much merger and acquisitions this year, which is a little bit unexpected given the low valuations of some of the companies and also the fact that a lot of the companies need to grow. And one of the easiest and cheapest ways at the moment is actually buying those ounces in the ground. I've done some figures that show that some of the acquisitions this year they've been valued at about $111 an ounce in the ground, which is quite low, and it does include some undeveloped deposits as well as depleting deposits, which is quite surprising. But there's such a range of those. It's something like Pan African Resources bought Evander for $8 an ounce. There's 20 million ounces, but at $8 an ounce, whereas IAMGOLD has bought Trelawney at something like $654 an ounce. That's measured and indicated. If you bring in inferred, it actually looks a lot bigger because they've got a huge inventory of inferred resources there. But it's the amount of mergers and acquisitions is not as much as I thought it would be this year.
So, Paul, the fact that there haven't been many mergers and acquisitions, is that bad news for investors?
I think it's necessarily bad news, but I think it would serve investors better if there was fewer companies, better quality companies. The industry is very stretched. There's something like 3,500 gold companies, explorers, producers, and the industry is very stretched resources-wise in terms of human resources. There's not that many good geologists, good engineers out there, and I think that's constraining people. And a lot of the consulting firms are stretched as well with the amount of projects under construction at the moment. So I think consolidation would in fact help some of the investors.
That's a really good point, Paul. Now, just to switch topics a bit, let's talk about gold extraction and the cost associated here. What are you finding?
Okay. Well, I mentioned before that the average cost of buying an ounce in the ground this year was about $111 an ounce. But of course, that is just still in the ground. You've got to get the gold out. So if you add in what it costs in the ground to buy, the total capital expenditure over the life of the mine and the operating cost, you get a figure for actually what it costs to extract. And you compare that to the spot price at the moment, it's 65% of the spot price, so which shows that there's quite a bit of a profit margin in the moment. But of course, the spot price might not be the right price to use. But the reason I'm doing that is because there was one of the analyst firms did some work 10 years ago that showed that over a 5-year period or so, that price of total extraction would actually mirror the gold price. It was actually zero discount. So what we're seeing now is 65%. So it's another way telling me that the assets are undervalued, companies are undervalued at the moment. One of the other things that comes out of this is quite interesting. If you turn the equation around the other way and say, okay, well, let's not compare it to a spot price, but what does this cost actually mean in terms of implied long-term gold price? And it comes out at about $1,150. So I think that's the way the industry is looking at the moment. It's not looking at the $1,700. It's actually factoring in $1,150.
That's a whole other topic, right? That's kind of going into what is the real value of gold, right, Paul?
Yes, well, that's indeed, because that's what it's going to cost to actually get it out of the ground. So.
Okay, good stuff. Thank you so much, Paul, and enjoy the rest of the conference.
Thank you, Danielle. Good to see you again.
And thanks for watching our continuous coverage from the Denver Gold Forum. We'll have more for you. In the meantime, you can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.